how do you hedge your portfolio? In high, good quality investment grade bonds is probably the right place to be in. They not only hedge against such a scenario of a trade war, but they're actually a beneficiary of that because, number one, your coupon is quite attractive at 6%, and when the Fed do cut rates, which I think they would in an economic slowdown, you will get capital gains. So total returns in 2019 has been double digit.
What do we do with the AI premium, Fook, because that is being repriced after DeepSeek as well?
Yeah, so the way we look at it is actually DeepSeek is a catalyst, because of the low-cost LLM model, that is going to broaden the adoption of AI across the economy, across all industries. And that would be, in fact, a tailwind, a catalyst for, the world becoming a digital economy. That has been our call in the last 5 years. We came up with this acronym called IDEA, IDEA, buy into beneficiaries, companies that are I, innovators, disruptors, E, enablers, A, adapters. And that has done very well in the last 5 years with DeepSeek and low-cost LLM is going to accelerate that trend. So stay with that for the growth side of our kind of barbell portfolio construct.
So this is interesting because the balance of risks is just evolving all the time, isn't it? We have to reprice AI, we have to reprice the Fed, we have to reprice tariffs as well, and how hard or otherwise Trump pushes. So in terms of allocation in this environment, is this potentially a buying opportunity if you got the stomach for this volatility?
Yeah. So if you were to
do we have to take a more defensive position?
If you were to create a portfolio, a long-term portfolio, I think bonds is really the anchor, investment-grade bonds, right? On the growth end, we are still very much, overweighted in U.S. tech. And the reason for that is the visibility of earnings growth. If you kind of look at it beyond 3 to 5 years, wow, we are talking about double digit. And why is that so? It's because, the world is adopting or adapting to this global economy. So not just semiconductor, we play into, the hyperscalers, software services, cybersecurity, automation, and also companies, we call them adapters, who can adapt to this digital economy. So brick and mortar, for example, a company like Walmart, who can, really take advantage of the digital, channels, would also do well. So really, this is, I think, the right approach. Now, in the middle of that, we do have some exposure to gold, and I think gold, because of its non-correlating characteristic, also ride the tailwinds of a market that's being uncertain for the next few months or years.
Gold just hit a record high. It's eased off, and we're just slightly below 2,800 if we can bring up the charts and give viewers a look. 3,000, fairly easy, do you think?
Yeah. I think what is very interesting about gold is despite the dollar being strong, despite bond yield being high, gold did not fall. It simply tells us that there is real demand, and that is shown in the allocation of central banks in their reserves. So at the low, it was 10% of international reserves. Now it's 15%. But if you look at it historically, the average was 29%. And we think, therefore, gold continue to be a great asset class to have in a portfolio.